Thank you, Stock Exchange, and greetings to all the interested party, the investor that joined our digital roadshow today. This is a very good opportunity for us to meet with you guys again for the performance of the company for the first quarter of year 2025, which we have just released the performance report last week. It's been quite a positive response from many parties regarding our performance, which is, I think, meet our expectation and go beyond expectation for certain analysts and investors. So let me recap what happened during the past 3 months and what we plan to do during the last portion, the rest of this year. For the first page here, we show the structure of the company, which is actually similar to what we shown before. And to highlight, we have right now expand our operation to cover the footprint of 9 countries around ASEAN, as well as Southern China. We also have quite a broad range of service, as well as the profile of our asset. We have over 2.3 million square meters of warehouse and yard space. We have more than 14,000 of total fleet capability working for us in SCGJWD fleet network. We also have more than 240 barges in operation right now, and we have more than 2.4 thousand total customers both in Thailand and in overseas. This is the structure of SCGJWD today. We have mainly consisting of 2 core businesses. The first one being logistics and supply chain, which actually contribute around 90% of our total revenue. And another thing is the other business, some of the supporting business that use to support our main operation, as well as some of the newer business opportunities that we are trying to invest in, categorize in these other business group. Let's go into the highlight for the performance of Q1 2025. We closed Q1 with a total revenue of 6.44 billion baht, which is somehow quite in line or similar to what we achieved in the last quarter or last year, quarter 1 year on year. The revenue seems not grow that much due to certain factors in the economics that there are some uncertainties and ups and downs in certain business segment. So we somehow pretty much maintain the same level of revenue here. But the interesting thing is that we actually grow a lot of profit, and we report the net profit for Q1 at 365.5 million baht, which is more than 2 times growth from Q1 last year. Out of this amount, around 90.7% was contributed by logistics and supply chain, and the rest from other business. The next page show the revenue profile from each of our business units, which is quite detailed. We don't have, I think we don't have enough time to elaborate everything right now, but you can go to our website or to the Stock Exchange website and download our MD&A document, also the Opportunity Day slides, as well as the financial statements. And get into details about these items, please feel free to contact us through the IR channel and email and other communication channel that we have available. We will be happy to furnish you with all the information that you may inquire regarding our performance. Talking about performance of Q1, there are quite a number of outstanding business units that working quite well. These are the example of 3 of them. The first one being the automotive logistics, which grow somehow better than last year, because last year it seems like the automotive industry a little bit slowed down. But after the exhibition of the Motor Show and Motor Expo last year and early this year, it seems like the demand for automotive, especially the EV cars, seems to rising again. And we also get benefit from that demand. And as you may see, we grow the automotive revenue from both from year-on-year perspective and Q-on-Q perspective as shown. We also grow quite significantly on the multimodal and cross-border transportation. For the multimodal transport, we grow more than 28% year-on-year and more than 24% Q-on-Q, which contribute to the transportation of the commodity business products as both domestically and also overseas to Cambodia. Another business that's still considerably small comparing to our total revenue, but is coming at a good pace and has quite a healthy growth from last year is the self-storage, where we see that we have a year-on-year growth of more than almost 64%. This is the business that we are trying to build up as somehow like a new S-curve that will bring out more additional profit out of our conventional business that we have. Take a look a bit at the overview of the industry that we cover. The commodity business, which comprise of the cement and energy products, steel, building material, chemicals, and packaging products that we do logistics for, mostly belong to SCG Group. It seems like these commodity products seem to be quite stable. I would say there have been not so significant ups and downs in terms of volume. But we have improved the commodity logistics by optimize the cost efficiency, as you will see in the financial section, that we gain more profit from this business, even though the revenue seems to stay quite at the same level as last quarter. Also, based on what we talk with our customer and from the viewpoint of the industry outlook, we foreseen that there might be some small upside in terms of the volume for the rest of this year regarding the commodity products. As for the automotive business, as I mentioned earlier, this year seems to be a little bit more, would you say, lively than last year. I would say the volume improved since January until March, and we see that there are a lot of demand in terms of the EV car, which we have a good portfolio in. So we're looking very positively into this business and industry. So hopefully we would be able to perform as well as what we did in Q1 throughout this year. Another business that's quite interesting and is one of our key pillar of growth is cold chain. We actually expand quite a number of cold chain facilities throughout the past years. Including this year, which I will show you in the next few slides, we also expand new warehouses during Q1, following by Q2 this year. And you see that the occupancy rate of the cold storage that we have dropped down a bit from 74.6% to 72%. That is not because of we losing the inventory, but it's because we are actually adding more capacity to the total portfolio that we have. That's why we have a little bit less in terms of the OR, but in the near future, we will fill in more and more product into that capacity and will result in additional revenue and profit to the business unit. Let me emphasize a bit on our business direction. We still persist on our esteemed target to become the ASEAN top integrated logistics and supply chain business with the quite an aggressive aspiration, I would say, to reach 100 billion market capitalization in year 29. That seems to be far, but I think we're still trying to keep this esteemed target and try to hit it as much as we can. As you may see, we start to demonstrate our growth since we merged the company to become SCGJWD 2 years ago. We gradually improve our profitability margin and improve our bottom line. And as you see, this first quarter of 25 become our new high in terms of profitability. And we believe that we are coming in the right direction, and we will still pursue our aim to grow the company as what we promised to everyone. And what we show on this screen is the 5 pillars of main driver for the growth, including regional expansion, synergies between the partner and group, strengthening more core competency, grow into the consumer segment, as well as grabbing the new business opportunities. We will also emphasize more on innovation and digitalization, and also emphasize much in sustainability. We are looking forward a lot into the green logistics, which will become our new product in a few years' time, that we're looking forward to support our customer to do the net zero. We also work a lot in terms of the inorganic growth and M&A, as we have done quite a number of deals in the past couple of years. There are a lot of questions from investors regarding the current economic situation, whether the impact from the U.S. reciprocal tariff would impact the operation of the company. I would like to ensure you more confidence to the company that SCGJWD, if we considering the first year impact from this policy, is very minimal, because we only have around 1%, only around 1% of our total revenue is the direct link of logistics to the US. So right now, if we considering as a first year impact, we see it's very minimal impact, but there might be some indirect impact. For example, our customer may be impacted from this policy and resulted in less logistic activity in our service profile. But we believe that this situation, on the other hand, become our opportunity. We always see crisis as dangerous and also opportunity. So we see that there are a lot of opportunity that SCGJWD might be able to support the customer due to our diversification in service profile, geographic coverage, as well as the industry that we cover. So what we show on this screen, either is being the freight business, cold chain business, cross-border business, and dangerous goods business. Only we feel that there will be only a controllable small impact from this policy. But on the other hand, we look forward to see more opportunity if there are some changes in terms of logistic plan in the region. We should be able to provide additional service tailor-made to the customer needs within ASEAN countries and China. And we also boil down of this economic situation and a bigger medium-term plan into the plan that we want to do this year. We just like to let you know that this year we change our short-term plan a bit. That means that we will be more cautious in terms of what we do. We will be more cautious in terms of investment, and we will try to reserve more cash and make more efficiency from our investment that we have invested years before. Now we are trying to make more profit out of what we have, existing business and existing investment. We are trying to reduce expenses as much as we can. As you will see that we have reduced SG&A by almost 80 million baht in this quarter comparing to last quarter. And we will also trying to minimize or reduce the finance cost, the interest paid that will happen this year by trying to repay as much debt as we can, because we have surplus cash right now. And if we do not have a heavy investment, we will be having surplus cash that we can use to repay debt and further reduce the interest, and at the end of the day increase our net profit. Let me recap a bit about the project updates that happened during the first 3 months of this year. We have opening up a new facility during Q1, following by Q2. Either it be the cold chain or cold storage warehouse in Slaburi phase 2. Another cold chain warehouse in Rangsit called Alpha Rangsit. Another one project in Chiang Mai has been opened already in Q1. And we are also opening right now another facility which belongs to our joint venture SCG Nichire phase 3 in Nawanakorn. So that is happening, and that means we have more capacity to serve our customer, equals to more revenue expected this year. Another warehouse that is not a cold chain, but is a general warehouse developed by Alpha Industrial Estate. It's a project Bangkadi. This one, we will take the whole facility to serve our major customer, namely Big Game Carrier, which is a very big project that we have signed the service contract with them last year. And when we have received this facility around September, we will have the upside in terms of the profitability margin from Big Game project. And Alpha Industrial Estate, they are still trying to develop despite the fact that right now the economic situation is not so well. We still have a lot of customer backlog that waiting for us to develop the facility for them. We also having planned to sell the assets to the REIT, which we expect that at least one project will be sold to the REIT by early Q3 this year. And we plan to sell around three more projects in Q4. So that is the plan for Alpha, which will help them to have more funding to develop newer projects, as well as have the profit sharing back to SCGJWD during the rest of this year. We also develop many other projects based on the synergy with partners. This is not the capex investment, but it is a collaboration. It is a new service project that we have initiated during the past few months. For example, we have worked with the GPO on the project to serve them on the healthcare and cold chain team. We are also trying to expand more, not just in Thailand, but overseas. For example, in Vietnam, we have signed contract for new and existing customer to expand the service. Either it be in the Vina Craft Paper project and AJ Plus Vietnam project. This has already been signed, and we will start doing the job for them right now. We also have a partner in China, which is one of our strategic countries. We are now focusing more on the cross-border cold chain solutions to link between Thailand, ASEAN countries, and China. And we already start the shipment cross-border of durian fruit to China. And we plan that we will have much more collaboration with our partner, namely Ruyun, which is one of the leading cold chain platform in southern China. Our freight business also have new product launched last quarter, which is called Custom X Service. This is a national single window service provider, which we just acquired the license from the authority lately. And we have already signed the service contract with some of our customers, for example, Noritake, SCG Plaster, and there will be more customers to come to sign the contract for using our Custom X Service agreement. We also work more in terms of the ESG side. We also work more on the part that will help our customer to do more on the sustainability. We work on a logistic for the RDF with our partner called SCI Eco, which will supply the RDF to Tung Song cement plant. So this contract has been signed, and we will do logistics to transport the RDF for them to do the recycled power in the cement plant. Okay. And apart from this, we also have received quite a number of awards during the last quarter. For example, we received the Logistic Thailand Outstanding Brand Awards. We received Excellence in Continuous Improvement from Expediter. We received the Star CSR Award from Thammasat University. And we also announced the Treasury Stock Program lately in, I think, 22nd of April. And the Treasury Stock Program will last until October this year. So this will help to stabilize the stock price and ensure maximizing shareholders' value for all our stakeholders. Apart from this, we also work more in terms of green logistics and ESG solution. We still aim for net zero by 2050. And in Q1 this year, we already successfully reduced the carbon emission by 4,056 tons of carbon, comparing to the whole year of 2024, which we reduced by 10,976, which is quite a good portion. We expect that we can reduce more of the carbon emission this year comparing to last year. So those are pretty much all the activities and updates regarding our business and plans. Let me recap a bit about our financial performance before we go into the Q&A. If there are some questions from the interested party, please feel free to leave your question in the chat box right now or raise your hand later when we finish the presentation slides. But before going to that, let me go through some of the highlights of our financial performance, starting from the overall figures of Q1, where we have achieved 6.44 billion baht of total revenue. Comparing to last quarter and last year, it seems to be in line. I think not much growth, but we successfully increased net profit margin significantly. If you see from 2.6% to 2.9%, and right now we achieved 5.7%, which is quite impressive in my opinion. And we will try to optimize more in terms of our cost of operation, expense, and finance costs, as well as trying to grow more top line to help us to grow more profit. Either way, right now in Q1, we already achieved the net core profit of 365.5 million baht, comparing to last year, which we achieved 164.1. That is 122.7% growth year on year. That is quite something that I think quite interesting. And we will try to I think this start to demonstrate our effort after we merge the business and trying to build synergy and optimize our cost of operation. Let's take a look a bit in some of the more interested business units, starting from General Warehouse. General Warehouse in Q1, we still achieve a good occupancy rate of 92.7% and successfully grow the revenue from last year and last quarter. We also have quite a good figure from automotive business on the next page. You see that we have grown the revenue from last year and last quarter, as well as improved the gross profit margin. So this in line with the expectation of the industry, and we see that this year Thailand seems to be a little bit more active in terms of the auto industry. I think for the cold chain or cold storage, the revenue in Q1 is still not very exciting, but based on the new capacity that we are receiving right now, after opening the 4 new facilities in Q1 and Q2, we should be able to boost up more revenue for Q2 until the end of the year after this. Please don't feel worried about the drop down of occupancy rates, as I mentioned, from 74.6% to 22%. That is basically because of we having additional storage space coming in. Okay, and in terms of transportation, we successfully grow the margin for both B2B transportation and D2C, which is meaning direct to consumer transportation services. Somehow, even though the revenue not growing that much, as I mentioned before, but we are trying to optimize more in terms of the profitability of this business. On the other hand, if you look at the cross-border transportation and multimodal transportation, this has grown quite significantly in terms of revenue, as well as the profit margin. This is, as I mentioned before, we have more activities regarding the cross-border transport. We are trying to capitalize more in terms of our geographic coverage and linkage with our neighboring country, which start to demonstrate the result as shown on this screen. And we think that there will still much more opportunity in terms of cross-border transportation and multimodal transportation for the rest of this year and for years to come. And even though if there are some policy change, logistic plan change, I think these 2 business units will be the business unit that can receive a lot of opportunities based on the change of plan of the logistic solution for customers as well. So those are the things that I like to highlight. Maybe if you have a chance to follow us up in the rest of this year and see the development of this business, I think it would be quite interesting. Let me skip a bit into a more interesting business, the freight business. Let's go to the freight business. You see that the freight business has grown in terms of profitability. The revenue not growing in Q1. Why the revenue not growing? Is because of the worries regarding the sea freight to US. As I mentioned before, when the US government announced the plan to issue the reciprocal tariff plan, many exporters slow their export through sea freight because it takes time to reach US. By that time, they are not sure whether they need to dump their product because they not enter into US due to the tariff war or not. So that's why in Q1 it seems that the freight volume and freight revenue toned down a little bit, but not that much. On the other hand, we have increased the gross profit quite significantly, and we reached the GP margin of 23.5% in Q1 if we compare it to 18.1% last year and 21.5% last quarter. Seems like we have successfully increased our profitability margin into the point that we think that it will become a very healthy business, and we are adding more of the value added. For example, the Custom X service project that I mentioned before, the national single window that we just acquired the license, will be launched in Q2 onward, and we see that will help us to add more in terms of the profitability to the freight business. Another thing that are quite interesting is the overseas. Overseas is our main pillar of growth, and in Q1 it achieved the revenue of around 1 billion baht. Okay, comparing to 1.03 billion baht last quarter. It's quite same in line with last quarter, but we successfully increased the profit margin of the overseas business. Another interesting aspect is the investment. The result of the investment that we did in years before has started to show off, and the equity income that we received in Q1 is quite significant. As shown on this screen, we received the equity income or profit sharing from affiliates at 170.4 million baht, comparing to 74.2 last quarter and 40.9 million last year. That is quite healthy, and we believe that we will still be able to achieve a high level, I would say high level of equity income for every quarter this year, even though it may not be as high as this every quarter, but it will still be quite high comparing to what we achieved last year. This is based on the plan that we discussed with our partners and what we've been working with them. We see that there are a lot of opportunities for many partners in these countries to work more in this situation. Before going to the end, I think I like to emphasize a bit on how we reduce our expense. As you will see on this slide, we have cut down a significant portion of SG&A this quarter. Comparing to last quarter, we reduced the SG&A by around almost 80 million baht, and we have the intention to maintain the level of SG&A like this throughout the year. So hopefully, if we can achieve this kind of thing, this should be contribute more into the bottom line. And at the same time, in the same direction, we are trying to reduce finance costs. And you see that Q1 we have less finance costs than Q4. This is due to some of the debt repayment. We are trying to use surplus cash to repay the debt and try to be conservative in raising more debt during this year. And We also start negotiate with a lot of the banks, our creditor, in terms of how we can possibly reduce the interest rate of the loan that we have. And we already successfully done some of those, and that will be demonstrating more in terms of figures starting from Q2. So these are the things that we are working on right now. And I think if you boil down to the bottom line, which is shown on the next page, where we achieve the net profit margin of 365.5 million baht, comparing 185.4 last quarter and 164.1 million last year. The yellow box and blue box are just representing the core organic operation profit and the equity income. Both are our profit, both are our real profit, but we just want to show you the part of profit that came from our existing corporation and the part of profit that came from our investment. And you see that both the blue bar and the yellow bar are growing significantly this year. So I think we are coming in the right direction, and we are trying to making more out of our existing business and investment, optimize in terms of operation cost, optimize in terms of profitability. That is what we are trying to do. And I think we have somehow demonstrated what we try to do from the last 2 years until now. It starts to show some good sign. So please follow us into the future and see how we can optimize more in terms of our profitability margin. In terms of financial position, it's quite the same. So I would like to skip to the next page, the key financial ratios, which is actually quite healthy. I would say we have reduced down the debt to equity ratio. We have reduced down net debt to EBITDA in this quarter, which is due to our higher profitability. So I think we also will try to reduce more of the debt by repaying some of the debt during this year. So we are working toward the way that we're trying to improve our credit ratings. Hopefully, we'll be able to achieve our target of being upgraded by the rating agencies soon. So that is what we are working on right now. And in terms of cash flow, by end of Q1, we have the surplus cash and outstanding cash on hand around 1.3 billion baht, which we already use. We will be using around 500 million to pay dividend on the 23rd of this year. The rest will be kept in the company for working capital, organic capex investment, as well as debt repayment. So I think we are in a very good position in terms of profitability, business outlook. We see that this year we start off at a good direction with a good momentum. We hope that the rest of the year we should be able to maintain this good performance, and we will try also to keep maintaining a healthy financial position and cash position, and make sure that we will try to reduce down our debt ceiling and reduce down the finance cost, and at the same time optimize the direct cost of operation and reduce down the SG&A expense. So that's all I think pretty much from what we did in Q1. And I think please feel free to send your question if you have one. If not, you can follow up with our IR team afterward if you need any more information. And please do not forget to go to our website, IR website. We have also a YouTube channel. We now working on releasing a series of podcasts which also have an English subtitle to explain more about our plans, our business, our development from time to time. So please check it out, and if you can, please subscribe into our channel and our Facebook and Instagram, and also we have TikTok right now. So I think that is pretty much I want to talk about during this session.